especially as hopefully you head into your retirement years, like I am. I hope to be. But we've got one other session coming up here. Now, I know that many of you showed up early this morning for David Luna, but I understand that really wasn't the reason you're coming, because originally we were going to have John Wise from Angel Oak come and speak, and then we swapped it out. And I know that Carrie Page from PRMG came out and said, "Oh, it's Lisa Lee going to speak," and they're all coming just to see Lisa because she's so great. That's the reason everybody's coming. They wouldn't have come for John Wise, but Lisa is the rep for Utah. For those of you who are using non-QM, for those of you who want to be using non-QM. In this kind of a market, lots of entrepreneurship, lots of people who have unusual forms of income. This is a great product. It's gone through some changes this year, but it's coming back strong. And we're delighted to have the leader in the non-QM marketplace here to speak today, Angel Oak. And so let me turn this over to Lisa.
Thank you so much. Thank you, Ben. Make sure to do this again. Thank you so much for having me. As you mentioned, I'm Lisa Lee with Angel Oak Mortgage Solutions here in Salt Lake City, Utah. I'm actually the rep for Utah for you guys. And some of you are very familiar to me and others are new, which both are super exciting because you're in the right place today to experience some great, exciting new things that we've released that can really help your business, coming forward. So Angel Oak Mortgage Solutions is a non-QM, non-agency lender. We came out with a small spot in the conforming market. Our mission and goal has always been the same, which is to provide financing for this huge underserved community of individuals that otherwise would not be able to get lending. So Angel Oak, this is what we're going to look at today. Just basically go over Angel Oak, talk about how we can help you guys in your shops and how we can help you grow your business. So Angel Oak Mortgage Solutions is a vertically integrated company. And what that means to you as a loan officer basically is that once you submit a loan to us, from submission through securitization, every single person that touches that loan is an Angel Oak company's employee. And that's important to know. We don't have to go outside of our walls for any exceptions, approvals, rate changes, product enhancements. It's all done within ourselves, and so that's really great to know for you. 35% of our loans, even though we are non-QM, still have exceptions made on that. And that is fully entrusted in our underwriting and management staff. So they make those, usually you don't even notice that they've happened. So we're huge at securitizing, so we take those loans. Angel Oak Capital takes our loans and securitizes them on the secondary market. And we've done over 20 securitizations, and what's important to know about that is that it's strictly non-QM stuff, which is huge, right? We've done $7.2 billion and 5 since COVID. This is what has helped us come back out so quickly and recover so fast, bring our products back out. We're about 85% back up and running now in the non-QM space. So they're AAA rated. This is huge. This was so unexpected because, again, it's just non-QM mortgage loans that are being securitized. So we're the largest originator in the non-QM space. Last year, we did $3.3 billion. And ever since 2013, we have remained the leader in the non-QM space in our industry. So that's super exciting. Our customers come first, and so some of the things that we talk about down here, we want you to have full access to the underwriters. It's huge on our end because, of course, it's a common sense approach to underwriting. This takes a mind shift for you. We're also used to AUSs and boxes kicking it out and telling us what exactly we need, pay stubs, W-2s, this, that, the other. This is a mind shift, so you've really got to consider it that it's literally someone back in the day manually underwriting these deals and trying to make sense of this loan. So it's different shifts. We want to make sure you have full communication with our underwriting staff. We want to help to differentiate you from others. So it's one thing to know how to sell these loans, but it's a huge, huge difference to know how to close them successfully and end up with a great borrower that's happy. So everything is very intuitive. We've invested a ton of money and time into our IT, which is great for you guys. And it continues to get better and better as it goes. And so that's really great for you. Of course, the most important part is having local rep, because we are the ones that can walk you through this and alleviate so much of the frustration when you're trying to shift from the conforming stuff over to, to our space. So that's the biggest part. And if you have branches in other states, please stop by and let us know. We'll make sure to get you in contact with so that the reps can contact those other people. So the pause, what happened? So obviously all of us know what happened, and it really did affect us it felt like within seconds, all of a sudden, we were from funding and happy and go lucky and everything was great too. We're going to pause. So this really affected us in the way that, in two ways really, and one thing I wanted to bring up about it is that this was not a credit event like back in the day. This wasn't a mortgage meltdown. This wasn't anything like that, right? It was literally, we didn't know if people were going to live or die from this thing, right? We didn't know who was going to have jobs, what companies were still going to be open. We didn't know anything. It was a huge question mark at the time that this happened. The other side of this too is that the investors and the securitization market halted, stopped, not just non-QM. All the investors went to cash. Everything that was being securitized stopped at that point. And so of course our lending stopped because that's what we do. So the recovery has been so fast for us and it's been so exciting to come back. Like I say, we're about 80-85% back up. So what is alternative lending and what does it mean to you today? A lot of the different things that we can go through. So the difference between us and QM loans, right? Even though we're non-QM, we still do have to show ability to repay some way, somehow, in alternative methods, right? So we're not looking at pay stubs and W-2s. We may be looking at bank statements or rents to show the ATR. We have different restrictions and loan fixtures that are attached to the QM side that we do not have to deal with as well. Of course, the QM caps, the max 3% versus 5% on non-QM. Debt ratio is different for us, of course, too. These are the types of borrowers that we can help you with. These are the loans that you can actually, the people that you can actually talk to about these deals. The most important thing to say about this is that we want to talk to you about any of those borrowers that have not been able to get closed on your conforming side, right? So we can basically take a look at any of those borrowers and see if we can retain them for you, which is the most important thing, right? So for instance, our bank statement deal, we have a huge entrepreneurial crowd here in Utah, right? We, a lot of self-employed people who are from 1099 out on the street selling solar, selling pest control. We have a ton of people selling doTERRA and this and that and the other, the MLMs. We have a lot of people, a lot of business owners here. So most of our loans that we do are bank statement loans. So we'll talk a lot more about that. So people like, obviously business owners, the CPA's goal is to write off as much as they can. So of course, the bottom line of their income, they don't qualify on conforming. So that's why we're here, right? Other people that just missed, like, oh, they have 6.8 years from a foreclosure because, I can't get them closed conforming. The great thing, again, to remember, this is a two deal for you, right? This is not, we aren't the end stop for these people. So we get them into the home of their dreams today, and then you can refinance them, in a year or so once they've, sought the advice that they need or had the seasoning they needed to get back into the conforming loan. So debt service ratio coverage, you've seen this out there. Last year we had a whole bunch of people come in the market. This is our investor cash flow program. So this is a great marketing tool for you, for investors. And it's a no income, no employment, no DTI product. So the credit event, and I love how John says this actually, we like to see people who have experienced a credit event, and we see the end goal for them, and we see the exit for them. We don't want people who are a credit event, and you all know those people that have the reoccurring issues, 20 W-2s in the last 2 years. I wonder why your income is an issue. I wonder why the layered risk people. We're really looking for those people that we can help them get back on top of things and get back into a home, get the refinance they need. That's an exit strategy. So the no income, high asset, this is such an awesome product for your high-end borrowers who cannot or choose not to verify their income and employment. Asset-based only, we'll talk about it later. And then of course Foreign National, we haven't released this yet, but we do offer a Foreign National product as well. So potential as far as you're concerned in the lending world, one thing that's guaranteed, and you all know it if you've been in this business a long time, the one guarantee in mortgage is change. There's going to be a different generation, a different era that comes in after this boom that we're having with refinances. And I can't imagine that too many people that were closing in the twos today are going to be back too soon to refinance. So you guys are in the right place at the right time because you realize that, which is great. So this shows back then in the day, this shows agency versus non-agency. And the interesting thing, you can see where the Wild West days were, right? And when it stopped in 2008, 2007. And now where we are today, the potential is so crazy. Last year, you can see where we were versus the days of actual, like responsible lending. So this next slide shows the reasonable loans from 2001 to 2003. We used to call them Alt-A loans, right? They still had credit profile. They had money in the game. They still were a good, strong borrower. And so you'll see back then, they were hitting up to, the 2001 to 2003 range, really doing great. And it was before we started these stated income, no regulation type things. So if you compare 2003 to last year, it's a huge, huge growth. So the potential here is just crazy for you guys to get involved with these borrowers because they're out there. So then if you look at the Wild West days, of course, the difference between a subprime borrower, right, and today's borrower that we're working with. Back then, the average score was 580. They had no money down. They had nothing in the game. There was no regulation, no proof of income. We just ran with it. So wonder why they all got out of those. But anyway, and now the potential today versus those is again, just looking at those reasonable loans that can now show 5% down at least. They have skin in the game. They have a 680 average score. That's what we're looking at, sometimes higher. And we have checks and balances now. We're making sure that they still ATR on these loans. So they're still responsible, great credit borrowers that have full intention of making their payments. Again, just one more slide. This also shows back the reasonable loans hit about $300 billion in 2003. Last year, we were only at $25 billion. So it just shows how much potential is going to be there. They expect, of course, next year to see $40, $45 billion come out of there. So that's coming from you, and that's what we need. So, of course, the potential is just crazy. They talk about the QM patch. No one knows really what's going to happen with that. Of course, those people should have always been in the non-QM space or been sent to us, but we'll see how that happens. So why should you care about non-QM stuff? So basically, this helps you stand out and differentiate yourself for your realtors. It's one thing to walk in and say we have low rates, no rates, we have no down, slow down, little down, whatever. Everyone has the same stuff. So this is a value-added option to let people know that you are different, that you do have these options for those borrowers. The agency fallout loans, and also what I brought up before, the 2-for-1. So you're actually getting them into the home and advising them to work on credit, to work on their taxes, whatever they need to do to get back into the space that they'd like to be in. So you're getting 2 loans for 1, and you're not losing that borrower to someone down the street. So the cost of turning away this business, and it's awesome that you're here because I know your phones are blowing up, your emails are going crazy, you all have tons of business right now. But to be here is recognizing that, without making sure that you have these options and have knowledge about them, is going to save you money, like instant earnings, of course. Your client, of course, that becomes yours for life because you've been able to get them in the home of their dreams now and refinance them later. Referral sources, of course, and relationships. Your referral ratio, and especially like CPAs, financial advisors, tax people, CPAs, brokers, of course, builders, those type of people. This again just talks about this huge underserved community of individuals that have the option now to get financing where they wouldn't have before. So this kind of shows that there are a lot of people out there with a 680 or below score, and a lot of people below 620 score still that are out there looking for stuff. Percentage of workers so there's a lot of people out there that actually are still looking for these loans. We're getting the calls directly because people are so busy. How can we help close more loans for you and help you do it? So these are actual borrowers again. This may be repetitive, but again, just the people that you can actually seek out for these type of loans, because that's what our goal is, of course, to help you seek out the people who can actually get involved in the non-QM space. So the self-employed borrowers, of course, your jumbo borrowers, right? They fall out of the conforming space. Credit issues and events, as we talked about. And the asset qualification, which is for the high-end borrowers that just have tons of assets but do not want to show their income and employment, and investors. So I'll show you some excellent marketing options that we have too. Okay, I hate to product up, but I want to tell you just real quick, I want to go through these slides and let you know what we have to offer today after COVID or since COVID, so you know kind of where we're at. So our base payment program is back. It's back up to 90% loan to value, which is excellent. It's 12 or 24 months business or personal bank statements, right? They must be 2 years self-employed. It goes down to a 660 score. And it allows you to go up to $3 million. So of course, a lot of these borrowers who are self-employed are buying big loans, big homes, right? So this is a great tool for them. And also, so on the bank statement, if you're going to do business bank statements, we want to see that they have at least 50% ownership. And then on personal bank statements, they just need 25% ownership. Of course, we just came out with this awesome product, which is 1099 only. We've never had this program before. And the 1099 only product is the same pricing as this, but what it's great for are your contract employees. You know, those people who are selling solar or pest control, traveling physicians. The other thing it's great for are even your agents that may have inconsistent deposits, and we may not like those, and so we can just use the 1099 instead. So 1 or 2 years 1099, and then an income earning statement. Awesome product. Here, the investor cash flow, you've seen these out again. They went crazy last year. It's your debt service ratio program. So it's a no income, no employment, no DTI product for your investors. They must own a primary residence to qualify, period. It's a debt service ratio program, so the debt service ratio that we require is 1%, which means the rents must be equal to or greater than the new payment, new PITIA payment, including association, excuse me. There's no limit on the amount of properties, so they can have unlimited amounts of properties universally. We don't care about that, so that bumps a lot of people out of your conforming space. And like I say, they can title also in an LLC, which is great too, because a lot of people have businesses for their rentals. So the Platinum Jumbo product, this is a non-QM jumbo loan. It goes to 90% loan to value. One thing to remember, we have no MI on any of our programs. So prepayment penalties only on investments. So this starts at $660 as well. It goes up to $3 million. This is our full doc product here. And it goes for occupied, non-owners, second homes, purchase, cash out, refi, and the 40-year fixed interest, or excuse me, 40-year interest only. We are now offering the 40-year interest only on all of our products. It's a 10-year IO with a 30-year fixed after. So that's a great option if you're shifting someone from a conforming space over to a non-QM loan. The asset qualifier, which I talked about. So this is the no income, no employment, no DTI product for your high-end borrowers that just cannot or choose not to verify their income and employment, right? So this allows you to go, it's a 700 score, you can go to 75% LTV, and the bottom line is they need to have about $500K in the bank, post-closing in combined assets, plus 5 years debt payments to qualify. It depends on what your new loan amount is going to be, basically is how it works. So this product, all we look at is 6 months seasoning on the assets right now. So you just need the most current statement of the assets and then a statement from 6 months previous, not all 6 months. So it's a really fast qualifying product. This product is really going to help us widen our range of lending for you again. This is our Portfolio Select program. It goes down to a 620 score. It'll allow you to go to 85% loan to value. It still allows you to go to 2.5 million on loan amount size. So this is going to be for the guy that is still dealing with some seasoning on their BK foreclosure, deed in lieu of, short sales. So this only requires 2 years from a credit event. It allows a 1 times 30 on the mortgage in the last 12 months too. And it also has the 40-year interest-only option on it. So this program will also consider those who have entered a forbearance agreement on a consumer or mortgage as long as they've made it current and paid 3 payments. And that also works on the bank statement loan now too. So technology, we have really put so much time and effort and money towards technology to make it easier and simple for you guys. Everything on our website, which you'll find at angelofms.com, you can stop by the booth too, we'll give you info, is so user-friendly. And we try to do that so that everything just doesn't become too frustrating for you once you're trying to work with a new system, a new pricing tool, a new lender. And so we have pricing tools, Quick Qual, Bank Statement Review Team, I'll talk about all this. So this is our Quick Quote tool. There's a lot of cues, so I apologize. The Quick Quote tool, it takes 9 bits of information and it will show you what the best rate option is. You can do this online, you can download it on your phone. You do not need a login for this tool, so it's really nice to use. You can run your scenario right there. And we are going to have this live at the booth as well. If you decide that the rate works and you're ready to go forward with it, you just follow the prompts, and this will allow you to submit for a Quick Qual, which is a pre-qualification with us. And all you have to do is you can pull in your 3.2, reissue credit, or just upload your credit. and bank statements, if it's a bank statement deal, and we will get you a pre-qualification within 24 hours unless we need someone to take a look at it. Quick qual. So, the bank statement review team, this is our secret weapon, and I tell you why. I know when you guys are, you have a borrower that falls out, it's easy for you to qualify them on a full doc deal. But when it comes to a bank statement loan, it's kind of unnerving when you're thinking, oh, I'm going to send someone out and they're going to shop for a home, and what if the income gets changed and and it's not what I told them, and now they want a $500,000 home, they can't qualify for it. Well, we now have a bank statement review team that is approving the income up front on these bank statement loans. So before we even send you a pre-qualification, we're taking a look at the bank statement income, we're making sure it works, we're getting their expense ratio, and we're going to make sure that all of that is tight before you even have a pre-qualification. So you can actually go to your borrower confidently, knowing what income they're going to be able to use from the bank statements. So it's huge. And then, like I say, we will send you out a pre-qualification with the stuff. So it's a huge benefit to your guys because it also speeds up time and underwriting as well. This is the live chat feature. This is so awesome. So if you're on our website and you're trying to fish around or figure out those resources or tools, anything like that, we have a live stream, someone live there that communicates with you. If they don't have the answer, they actually will email and call us immediately and get us on the phone. So it's a super feature. Again, this is just showing our TPO portal. That's our underwriting portal. To me, for you as loan officers, the most important part is our marketing tools, which I'll show you now. So again, I'm going to go to how we can help your business. So the realtors, of course, other loan officers, big banks, credit unions, a lot of times they don't have any options. They won't sign up with non-QM lenders, so this is a great product for them that they can't get done. CPAs, tax advisors, financial planners, wealth advisors, all of these people, their goal in life is to save people money, make them a lot of money, but find loopholes for their borrowers. And so they're looking for an option, for financing for the people that usually could not get financing. So it's a huge value-added service for them. Builders, developers, hard money lenders. A lot of times they have stuff sitting on their books, but the people aren't ready to get back into conforming loans. So there's a great option there. Lead providers, of course, and business bankers. For your realtors, of course, this gives a huge amount of traction to them because we're getting calls from realtors directly. They're calling Angel Oak Mortgage Solutions because loan officers are busy. I understand that. They're looking for people who can actually do these loans. Who is doing the non-QM stuff? A lot of people turn it away. That's why you're in the right space, because there's a lot of people out there that are just saying, oh, I don't have time for it, I don't want to learn it, I'm afraid of it, I just don't want to do those type of loans. That's great, but there are serious borrowers out there looking to buy homes right now, and the agents really are anxious to find out who is going to be the professional in the non-QM stuff. So we have a presentation too that is made for you. It's just a deck exactly like this that you can use and customize. It's awesome. This is our marketing stuff. So you have a million things to market and sell. We do one thing, and we do it really well. We have the best marketing team in the world, in the country, to me. They've already created this stuff for you. So not only are there flyers, but there's presentation, as I told you. There's the whiteboard videos, all the social media posts. You can customize them in your name and send them out. There's no Angel Oak stuff on there. So all you need is a login to our portal, which I can get you. So obviously, this is going to help to differentiate yourself from the rest of the loan officers out there. These are just some key features that you want to look for when you're getting involved in a non-QM lender, and this does set us aside from a lot of the rest, which is, basically, if you want them to be customer-centric, which to us means that we can get involved. You have local representation to walk you through the deal. You have our team. You have to, lean on our team. We've got a huge, incredible team inside to help you with these. So, also the non-agency specialists. That's all we do. So all we do is non-QM, day in, day out, all of our staff. We focus on non-QM, make sure that they have years of experience. I've been in the business for 30 years, just so you know, long time. Easy to work with, obviously. We try to make it easy, and our goal is to really master the communication because the frustration comes with lack of communication. And then exceptions, like they're made autonomously. A lot of this stuff just happens. So. And then, of course, offers a ton of resources, which we have all available for you. Any questions?
What kind of underwriting time is once you get from you up front and pre-qualified? But I find
Yeah.
a lot of people get so busy now. We're waiting
It's perfect.
days.
So he asked what the underwriting time is, and that's a perfect question for the non-QM space especially. We're averaging about 17 to 20 working days from start to closing right now in the non-QM stuff. So it's a very high priority. As I mentioned, so the securitizations are a great thing for all of us because they've been oversold. They're literally, we need loans. So for us, this is a win-win. They need these loans in, they need them closed efficiently and quickly, so we're moving real quick on that. Anything else?
You're still doing agency stuff, right?
We just have a Freddie Mac program that is also getting offered as well. Yeah, so we do, you'll see on our website, we have a small pricing tool for the agency stuff as well. We brought it out basically to help our partners, our business partners out there like you guys when all the other lenders were super crazy and basically to keep us fed for a minute. So we do have a small presence in the Freddie Mac program.
The seasoning on the DSCR.
Oh, he asked what the seasoning is on the DSCR. Seasoning for what, I'm sorry?
For using appraised value.
Oh, for value, yeah. So they do. So we can actually, we only look for about, you know, if you want to use appraised value on the property, you're going to be looking at 6 months. Of course, 12 months for cash out. So.
I was talking with a company the other day that does quality control software for loans and stuff, and it was mentioned that they thought that, given all the changes in the economy, in general, and COVID, that particularly non-QM investors may be looking for more stringent quality control measures across loans. Have you heard anything along those lines, or I suggested that, I said I haven't heard of any problems in non-QM loans, so I'm not sure how to bring that up.
No, thanks, Vince. And he was just asking if there's any really more stringent details or you know, requirements that are going to be had. You know, of course, Angel Oak, as I mentioned, is we are all within our own, you know, own company. So everything, all the decisions that we make, of course, are within ourselves, which is really important to note. It's huge that, you know, we still are a little bit limited. We aren't full 100% back to where we were previously. As far as the scores are still a little bit higher, rates are a little bit higher, LTVs are a little bit tighter. We haven't dropped our non-prime product yet. So we are being very limited and cautious about coming back out into the market. But the crazy thing is, the performance of these non-QM loans, which goes back to the difference between a subprime and a non-QM loan, right? This borrower wants to pay this mortgage back. They are performing so highly. We've lost maybe 2 or 3 loans to default in the whole time we've been in business, and we only do non-QM. So that's really a great question, but no, we've not noticed any kind of cutback stringency. We've actually kept releasing and enhancing our program as this has gone on, so it's been really exciting for us. So the investors have seen that. The way that our loans have been performing, they're just clamoring for these non-QM loans to come back into the securitizations. So it's really great.
What kind of interest rates realistically do you have without paying a ton of closing costs?
You know, so interest rates now, I mean, I would say we're about 100 bips, 100 basis points still off of, you know, from pre-COVID, you know. So we're still off a little bit on rates, but you're starting at about 4% and up from there, just depending on the loan to value, depending on their, you know, on their income type. So if you're looking at a bank statement deal, you know, of course you're going to have a hit for bank statements, cash out, that sort of thing. So but they're starting at 4 at the low LTVs, and we're going up into the, you know, average 6s, you know, if you're looking at a high LTV, 85, 90%. Now, again, remind you that there's no mortgage insurance. And the other thing I wanted to remind you is that 40-year IO is awesome for those deals because, you know, they're getting an appealing, you know, payment for a minute while you can help them seek advice, you know, to get their stuff fixed. Or come back to us and refinance as well. We do a lot of our own refinances. So, you know, they may choose. You know, it's not the worst thing in the world that they have a higher rate is all. We all know that. But instead of, you know, if they seek the tax advisor and he says, well, yeah, just write me a check for $100,000 and we'll make sure your income looks great. Well, what's worse? You know, so sometimes these borrowers choose to stay self-employed, choose to write off all the stuff on their taxes so that they can, you know, then take advantage of our bank statement loans or our self-employed stuff. So, anything else?
Could you talk about prepayment penalties?
Yes. So our prepayment penalties, they are not allowed on anything except for investment properties, right? Our prepayment penalty is standard 3-year prepayment penalty. It's a 6-month interest penalty, basically. You can buy it down or out, either in rate or cost. So it just depends on, you know, which way you're looking at it. But yes, it's only on investment.
How about the early payoff penalty that?
We do have, oh, good question. Yeah, so we have a 6-month, it's actually, it's claused as 180 days from your funding date, basically. And so that's your buyback clause basically. So if you do a lender paid deal and we pay you commission, it's a 6 month from there. Good question. So we actually did just, and this gets pretty deep, but we did just add a clause onto our new addendum which states, and this is from COVID, that if the borrower does an instant forbearance, which instant means within 30 days of our funding time, that there will be a write-off on that. So that's, you know, a chargeback for that. That's the only real change that we've seen. Well, thank you very much. You guys are so awesome. Please stop by our booth if you have any questions, scenarios. We'd love to run them for you, show you around our website, and get you all the tools that you need. Thank you very much.